Welcome to our Ask an Expert show, where I invite a fellow professional in the cross-border space to come in and talk to me about the issues we think expats and immigrants in America need to be aware of if they're going to thrive here. My guest today is Daniel Price. Dan is a tax attorney with a practice that includes the civil and criminal defense of US tax audits and investigations, and, of particular relevance to our listeners, assisting individuals in navigating the process of coming into compliance, especially those with international reporting obligations who, for one reason or another, have failed to comply with US tax law, which, frankly, is pretty much every expat or immigrant I've ever met to one degree or another. Dan is the managing member of Daniel N. Price P. LLC, a law firm he opened in January 2023 after 19 years working for the Office of Chief Counsel of the IRS. Yes, you heard that right. My guest today, who has come to talk to us about why and how to voluntarily get into compliance with the IRS, which puts the fear of God into most of us, spent nearly 2 decades with the IRS, and during that time he was intimately involved in the establishment of these very same voluntary compliance programs and procedures. So I cannot imagine someone better positioned to come and talk to us about this. Not just a letter of the procedure, but hopefully to provide some insights into some of the inner workings and thinkings of the IRS. Dare I say it, maybe even demystify the IRS, if only slightly. I'm extremely grateful that he's agreed to come and share his knowledge and insights with us. So without further ado, let's get into this. Hi Dan, welcome to We're the Brits in America podcast.
Thank you, Richard.
I'm so excited to have you here. This is such an important topic. As I alluded to, yes, there will be exceptions, but in my experience, pretty much every single expat or immigrant who moved here mid-career and who accumulated stuff outside the US, they're all in some form of non-compliance. There are exceptions. Yes, people who take advice before they come here, absolutely. But I'm talking about the people I see. There's always some sort of non-compliance. One, it's getting people aware of it. Then it's two, once they're over the shock and frankly fear, it's helping them realize that one, they should do something about it, and two, solutions exist.
Absolutely. And Richard, look, let me just comment on this. You mentioned that almost all immigrants that you deal with have some level of non-compliance. I want to explain why. The U.S. system of tax reporting and FBAR reporting is exceedingly complex and materially differs from the reporting requirements in most other countries in the Western world. So people may have backgrounds and educations, and they may have some experience with local taxing authorities in other countries. But the IRS and the U.S. tax system is just so different. So a lot of the mistakes are genuinely innocent. Now, trying to explain that to the IRS is really an art form.
It's so different. And that's both a defense initially, but as time goes by, that defense loses some of its potency, should we say? And I think it does logically, but also I believe in the eyes of the IRS. If you're a brand new expat here, sure, okay, you've made a mistake, you don't know. You've been here 20 years. I imagine they're less inclined to believe you don't know some of this stuff, perhaps.
That's very true. As time goes on, one's awareness of obligations in the country of residency, specifically the U.S., should increase over time.
I don't want to jump the gun either as well, but it's not just that expats are unaware of these unique US requirements. That's part of the problem. The other part of the problem is the potential penalties, I should say, for even innocent, what I class as innocent non-compliance. Non-compliance where you've not been trying to hide anything, you've just simply not known or not been aware of, what the IRS might call non-willful. You posted recently, without wanting to get too much into the weeds already, but you posted recently that the FBAR penalties for reporting foreign bank accounts and other assets, the penalties, they get re-rated every year with inflation, $16,000 a year or $16,500 a year for non-willful. So if you haven't been reporting a bank account or a pension or some other account through not for anything malicious or mendacious, just because you didn't know, potentially for each year you can get hit with a $16,500 penalty or something. That to most people outside the US, that will blow their mind.
Oh, and that's one example of a monetary penalty, but that's a flat penalty. $16,500 per non-willful violation. Think about some of the transactional penalties. Many foreign retirement plans may be classified as foreign grantor trusts for U.S. purposes.
Mm-hmm.
There are transactional penalties of 35% of contributions to foreign trusts or distributions from foreign trusts. So let's say there's a lump sum distribution and it's not reported properly. The IRS may assess a 35% penalty based on the transaction. Those transactional penalties can be crippling. Additionally, the penalties for failing to timely report large foreign gifts and inheritances are percentage based. 5% per month for the failure to report, capping at 25%. So a 6-month late reporting would yield a 25% penalty
Yikes.
based on the gross amount.
They're crippling. And wait, it gets worse. You've not filed this form, so you're potentially exposed to these penalties. But in not filing the form, your statute of limitations doesn't start clicking. It doesn't. The clock doesn't start ticking because the IRS considers your tax return incomplete, or at least incomplete as it pertains to this missing form. So even once you've run the clock down after 3 or 6 years, arguably, and then you add interest onto these penalties potentially, right? And it gets very ugly. The more I go down this road, the uglier and uglier it gets. It stresses me out, and I'm only tangentially related to it.
Yeah, we talk about the statute of limitations issue briefly. Under Code Section 6501 C8, the failure to file designated information returns will indefinitely hold open the assessment statute of limitations. What does that mean? The IRS would have an unlimited time to start an audit and assess additional tax. Now, there are exceptions. If the failure to file that information return was due to reasonable cause, we can say reasonable cause is a legally justifiable excuse. There's a body of case law that gives us some parameters, but it's a fairly narrow realm of legally justifiable excuses. Then the statute of limitations would only be open as to income attributable to items that should have been reported on that information return. But in general, the IRS takes a very constrained view of reasonable cause and will assert the entire return is open indefinitely when these information returns relating to foreign transactions and assets aren't filed.
That's not you phoning up and saying, sorry guys, I just didn't know. I've done a podcast on reasonable cause with another tax law. That is an involved process, as you mentioned, tight parameters and a whole process asserting it and then hoping it gets accepted. It's not just a, sorry Gov, I didn't know. It's way, way more involved than that. Right, so now we've got everyone terrified. Look, I got straight into it there. I couldn't help myself. But allow me to take a step back and just ask, will you introduce yourself and tell us about your background, specifically, obviously, these 19 years with the IRS?
Absolutely. Graduated from the University of Texas Law School and accepted a position with the IRS Office of Chief Counsel, thinking I'll do my mandatory 3 years as an honors hire, get some litigation experience, and then jump ship and work for a big firm. I started off as a trial attorney. My boss at the time, my reviewer, said, you'll be rated not on settlements, but on trials. So I cut my teeth as a trial attorney, handled many different types of cases in bankruptcy court and tax court, individuals, corporations, estates.
Civil or criminal as well?
Civil.
Okay.
Now, over time, I pivoted from just a trial attorney to a manager with the Office of Chief Counsel, and then pivoted into some national oversight roles relating to international reporting and international compliance. So I had the privilege to be trained by some excellent mentors that were experts in international tax. I participated in the redrafting of the 2014 Offshore Voluntary Disclosure Program. And then I was one of the principal legal advisors in interpreting that program. I also helped draft the streamlined filing compliance procedures, and I was one of the main legal advisors relating to the interpretations of those procedures. So I advised the IRS on these national programs that were designed to bring international non-compliant taxpayers back into compliance. Based on those experiences, I also was one of the main drafters of the IRS's revised voluntary disclosure practice. That's really designed to bring taxpayers who have real criminal exposure back into compliance and not be criminally prosecuted. I also had the privilege of working on all sorts of interesting projects, from ideas for John Doe summonses. We could talk more about what those are, to LB&I international compliance campaigns. Had a great career, and then I pivoted, and now I'm in private practice.
The vast majority of the population, myself included, the IRS is this kind of very terrifying organization that you really have no idea how it's thinking. Yes, it doesn't matter. You can read, and watch everything that comes from the IRS, but really, you just have no idea. It's very intimidating. What's it like working inside? What was it like? 19 years. I say totally ridiculous. I can't ask you to expect you to sum up 19 years, but I'm interested in how you reflect back on that. What it was like being as part of the IRS.
Working for the government requires a degree of patience that some people don't have. Dealing with ridiculous procedures, looking for practical workarounds in everyday life. You have to be patient. You need to be resilient, have some creativity, or you need to be, I hate to say it, a drone. So unless you're creative and resilient and work through the system, or you're simply a drone that conforms to the system, those are the two major buckets of IRS workers. Fortunately, I worked with teams that were creative and resilient, and I enjoyed my tenure. I had fun, but there were also frustrating elements of government practice.
And 19 years IRS, and now what? Just this is your second year in private practice. You just completed 2 years in private practice.
And I also took a year off to do some pro bono work. So I've been three years out of the government, 2 years operating my own law firm.
So 19 years on the government side, creating these programs and in court, prosecuting tax cases. And then for the last 2 years on the other side of that, working with the taxpayers who previously, I guess you could say, you're in opposition to in some ways. What has that experience been like? And has it given you, it must have caused you to look back at your time in the IRS and think, oh, do you know what? I wish I'd known this about individual taxpayers now when I was drafting these laws. Or do you wish you could like communicate with your ex-colleagues in a way and say that you're seeing an action, interpreting it as X, but really it's Y?
The largest item that I've learned being in private practice is the real cost true and complete compliance brings on middle class taxpayers. The IRS has this view, well, everybody should comply with the law. Why can't you comply with the law? Taxpayers need to find the right advisors. Right advice costs money. Filling out the panoply of forms to comply costs money. I think the IRS really doesn't understand the compliance burden on the average international taxpayer. And I've provided public comments back to Treasury and IRS Office of Chief Counsel about some of these topics because the compliance burdens are colossal. I've seen taxpayers with the requirement to report foreign mutual funds as PFICs on Forms 8621, where the accountant's cost to prepare the return have eclipsed the value of the underlying investments. That's ridiculous.
I can believe it. Yeah.
And the IRS doesn't understand that.
And then you point it out to them and they disregard it.
Well, they say, to their defense, Congress writes the laws. The IRS simply administers them. But the commissioner does have inherent discretion. And I just feel that that inherent discretion hasn't been used sufficiently.
Let's get on to the topic at hand. As I said before, and as you mentioned, we have one of the architects of the compliance programs, specifically the streamlined. What we're here to talk about is taxpayer, expatriates, immigrants, or anyone with international assets really, is frequently in some form of non-compliance. And that can be a scary place to be. especially once you realize the size of the potential penalties involved and the scope in terms of what they call penalty stacking, right, Dan, where you'll get the FBAR penalty if that's not bad enough, they'll lob on an 8938 or a 3520, and they'll do it for multiple years. And once you start totting up and doing the maths, it's an utterly terrifying place to be. But solutions exist, and we're here to talk about those solutions. Should we talk a bit, first of all, about why it's important? I tell you, a common refrain I've heard when I've pointed this stuff out to someone is, "Oh, they're not looking for me. Oh, they won't find me," which I find a strange attitude to take straight away. But let's maybe talk about how they might catch up with you.
That is a common refrain. Taxpayers will say, or potential clients may say, I'm just a small fish. Why would the IRS ever even look for me? How would my name ever pop up on the radar? Well, one way is just by random chance. The IRS has an algorithm to randomly select people for audit. We can call it the unlucky lottery. It's like getting hit by lightning. Nobody wants to get hit by lightning. Nobody wants to get selected for an NRP or National Research Program audit, but it happens. And when it happens, part of the standard audit question is, do you have any foreign bank accounts? Do you have any foreign investments? And when an IRS agent is asking you that question under oath, you have the option of either one, answering truthfully, or taking the fifth. Either way, the exam is going to continue and the examination is going to focus on international reporting. But the IRS also has many other avenues of information collecting. Intergovernmental agreements or tax treaties provide the IRS with tremendous amounts of data. When I worked with Chief Counsel, I worked with the Exchange of Information Office that handled treaty exchanges. At times, the IRS, through its treaty partners, received spontaneous tips about taxpayer noncompliance. For example, country one might say, we have some evidence that our citizen is also a green card holder and may be out of compliance, IRS. And guess what? The IRS takes those tips very seriously. Additionally, FATCA and the automatic exchange of information from FATCA partners provides a treasure trove of information for the IRS. So if you're a U.S. citizen or green card holder residing, let's say, in Western Europe, every bank in Western Europe will screen for citizenship and then report that bank account information back to the IRS.
Dan, just on that obviously is a colossal amount of data. And again, no one being able to see into the IRS, one of the kind of like theories that abounds is this colossal amount of data is just sat there somewhere. And it's either waiting for someone to go through it and discover all these unreported accounts, which, let's be honest, would probably never happen because it's too big a job, or, worryingly now, is waiting for someone to feed it into a system and for AI to trawl it and just throw out discrepancies. Is that a reasonable outcome to think that could happen?
Absolutely. The IRS is greatly improving its data analytics. Since I departed the government, the IRS has publicly touted advancements in data analytics, including the use of AI. But let me talk about what I saw firsthand even before I left. Although the amount of FATCA data is colossal, even using simple data analysis tools, the IRS can select cases that appear to give good audit potential. I'll give you an example. The FATCA data received from Western European banks can easily be compared against Form 8938 reporting and FBAR reporting. Very simple data analytics. A bank is telling us about a colossal account held by taxpayer Smith. Taxpayer Smith didn't file an FBAR or an 8938. That's low-hanging fruit. I also saw firsthand some cases where the FATCA reporting the IRS received from its IGA partners was materially incorrect. For example, a decimal placement error in an account balance could trigger an audit. So the bank might report a maximum balance of 8 million, whereas in reality, the maximum balance is 80,000. And that disconnect can also trigger audits.
Oh, so they come at you thinking you've got 8 million, you've got 80,000. They're not coming at you with smiles and being all nicey-nicey. So the message is, well, I've had one tax attorney tell me in response to they're not looking for me. It doesn't matter what the IRS are looking for. It matters what they find. If you have unreported accounts, bank accounts, mutual funds, these PFICs we're talking about, ETFs, pensions, retirement accounts, I think it's very, very foolish to just hope that it will never catch up with you. Maybe it won't, but that's getting less and less. It's getting more and more likely that it will.
That's true. Additionally, the IRS encourages whistleblowers. There's an active whistleblower program. The IRS advertises the awards it'll provide when tips successfully lead to the assessment and collection of tax and penalties. And penalties are a major component of those investigations. Think about willful FBAR penalties. Willful FBAR penalties have now started 160,000 and change per year, or 50% of the bank balance, whichever is greater. So whistleblowers have a strong incentive to provide tips relating to international noncompliance.
Let's talk about how to get into compliance. And I want to preface this with, I've been doing this for 10 years, Dan. And what I've met a lot of people, and as I say, the vast majority of them have had I believe have had some form of noncompliance in there. Also, the vast majority, perhaps even every single person I've met, has wanted to do the right thing. I honestly have never met anyone who was trying to commit tax fraud or conceal assets from the IRS. Or if I have, they haven't told me. Some of them were making questionable decisions, but no one was actively hiding stuff or trying to underreport to save tax. So the community I serve, expats and immigrants, yes, I think non-compliance is high, but it's accidental / innocent. My feeling is, and this was increased when I recently read a book about 15 years on from the Bernie Madoff scandal. It was a reporter who had gained access to Bernie Madoff in prison and had done a deep dive, and it was fascinating. And I was just struck by how mega wealthy people really are trying to game the system, really are trying to, so some of them obviously, really are trying to commit to hide and underreport assets. I think I don't believe this problem largely exists in the international expat space. I do think it genuinely exists in the American space, which I find wild. That people who are ungodly rich are then trying to, taking the risks that are involved in committing tax fraud. I find it hard to fathom. Maybe that's why I'm not a billionaire. So the reason I raise that point is I truly believe that the vast majority, if they're if they're in some form of non-compliance, are doing so out of, it's an accident, it's out of unknowing. There's no malicious intent there.
I agree with that. In fact, I would extrapolate even further. I think the vast majority of U.S. persons, green card holders, U.S. citizens, whether residing in the U.S. or abroad, have a very healthy respect for the IRS. They want to do the right thing. It's a very rare person who intends to commit tax fraud.
You say that though, but the scandal that really ratcheted all this up, the UBS thing, that was naked tax fraud. That was a sizable chunk of of wealthy Americans hiding money. These burn notices, right? No, obviously, I'm kind of horrified by the level of penalties and the repercussions for this innocent non-compliance. And then I'll try and put my IRS hat on and think where they're coming from. And that you and I have talked about it before, this idea of like willful blindness. But also, if you're working in the international space and you're being fed all this information by UBS or whoever under the amnesty program, where you must, all these accounts where they were hiding money, there's no way around it. They were hiding money from the IRS to avoid paying taxes. Yeah, I'd get pretty cynical.
That's actually a good way to explain how the IRS approaches the vast majority of these cases. Because a tiny fraction of taxpayers purposely used Swiss bank accounts and other foreign bank accounts to evade paying taxes, there's an inherent suspicion of all taxpayers that have international holdings. So
Mm.
think about it from the enforcement side. The IRS sees the worst of the worst. The IRS went after UBS and Credit Suisse and so many other banks. Look at the Department of Justice Swiss bank program. So many banks came forward for non-prosecution agreements. That taints the view of the benign actors. From the tax cop perspective, there's almost a default view of, oh, they must be hiding something because they have a foreign bank account or a foreign investment.
And I get it. I'm kind of, and it's horrible, going back to what you originally said, it's horrible that the kind of middle-class taxpayers are sucked in and bear the burden of that. The people who aren't hiding 10, 20, 30, 50 million in a UBS account. But here we are.
The IRS also made an interesting admission. The IRS has an internal auditor called TIGTA, or the Treasury Inspector General for Tax Administration. TIGTA will audit various IRS functions and then publish reports. TIGTA audited the international enforcement of individuals by the Large Business and International Division, LB&I. So LB&I kind of has a split personality. It audits the biggest corporations, and it has a little international section that handles international individual taxpayers. So TIGTA audited that component that audits individual international taxpayers and criticized that section of the IRS for basically not having a good return on investment. Well,
Oh, really?
in rebuttal to the TIGTA report, that section of the IRS said, we focus on penalties. Now, what's interesting is TPI, or total positive income, of the taxpayers under audit was only like $200,000. And then LB&I responded saying, yes, but we focus on penalties, and that wasn't taken into account. So I view that as an admission that the IRS is really focusing on middle class and upper middle class taxpayers and really focusing on penalty shakedowns rather than on substantive tax.
Oh, it's so horrible. And these are the people we work with, people who've come here, they've made it, they've done well. Not ridiculous, it's not what I call FU money. It can still run out. And one of the reasons it can cause it to run out is you get hit with penalty stacking from the IRS. So now we've sufficiently terrified everyone, myself included. And on the assumption that the people we're talking about, the people I'm referring to, this is innocent, well, in my parlance, innocent non-compliance. What do we do? What do they do?
We have to have that assumption first. Let's assume, for argument's sake, the taxpayer was non-willful. This is an innocent, benign mistake. Well, one potential option may be the streamlined filing compliance procedures. I'll walk through the two major sections of the streamlined procedures. Streamlined domestic offshore is designed for taxpayers that do not meet a very specific non-residency test. What does the IRS offer in this procedure? If there's international reporting mistakes, either FBAR, 8938, other international information returns, and there's some quantum of previously unreported income from a foreign financial asset, the IRS is essentially saying, come in. We want you to come back into the fold. Tell us why you made these mistakes. File your correct tax returns, amended returns for the most recent 3 years. Clean up your FBARs for the past 6 years, and simply pay a 5% penalty on the unreported foreign financial assets. Now, that 5% penalty can be steep. What if it's a foreign pension, a UK SIP that was left off an FBAR, and somebody has $800,000 in that SIP? That 5% penalty can be costly. But in exchange, the IRS says, so long as you are non-willful and non-fraudulent, your penalty will be capped. So it's an exchange. 5% penalty in the back tax for the most recent 3 years, a story in exchange for an assurance the IRS won't seek higher penalties.
Dan, can I just jump in a second? I find people will fixate on the penalty. They'll think, okay, so it's going to cost me 40 grand. Yeah, but also, if you're doing the streamline because you had unreported income elsewhere, maybe related to the SIP, and you're going to have to refile the tax returns and pick up that income. So you've got the penalty plus, and I'm sure this is really obvious to you, but I find people, they don't put two and two together. It comes as a surprise to them. They think their exposure is the 40,000, the 5%, but it's not. It's the tax you should have paid, plus the interest on it, plus the penalty, plus, frankly, the cost of undertaking this action, because you're going to need accountants, and I urge you, for reasons we'll get into, to hire a good lawyer. So the cost mounts up, and that frightens some people. And I asked them to think about what we talked about before, because if they really sat down and did the maths on the penalty stacking, the FBAR penalties, the 3520 penalties, and the rest that can apply, tax underpayment penalties, if they came at you full force, it'd be orders of magnitude of that.
That's a really good point, Richard. And typically, when clients are on the fence about which compliance path to take, I'll prepare a rough spreadsheet. Here's the predictability, or some level of predictability, by making a streamlined submission. Now, the IRS can always audit a streamlined submission, and the IRS may not agree with the taxpayer's position, but that's something that could be battled on audit too. But look at the potential predictability of a streamlined submission versus the what if you do nothing and the IRS later audits you, and you have all these open statute of limitations and all these other potential penalties that could be added on. Normally that second what if of doing nothing is scarier than the cost of a streamlined.
I can believe it. I can well believe it. But I don't think people, I think people need to see it to believe it. It's all very good at saying penalty stacking this, but to see those numbers, I can imagine that. That's
And honestly, it's a matter of personal risk preference. Like, think about risk in the context of everyday life decisions. Some people will go bungee jumping and skydiving, and they race cars and motorcycles. Others are very risk averse. They want a very safe life. So risk tolerance also plays into the individual decision about what compliance path to take.
okay. So that's the domestic procedure.
Now, for the streamlined foreign offshore procedure, the IRS is implicitly acknowledging that U.S. persons who have spent considerable time abroad may have lacked full awareness of their U.S. filing obligations. I deal with many clients who moved abroad and they didn't realize they needed to continue filing U.S. tax returns. They think I've moved to the UK, I'm filing with HMRC, I'm in full compliance here. I didn't know I had to do something back home with the IRS. And they may get some partial information. Well, you pay higher taxes in the UK. There's a foreign tax credit, so you wouldn't even owe anything to the US. Or they may hear about the foreign earned income exclusion. And they think, well, I'm under the foreign earned income exclusion. I don't even have to file a tax return. And sometimes people simply get bad advice too. So there's an implicit acknowledgement by the government that if you're really living abroad for a period of time, you might have misunderstood your U.S. filing obligations. So for streamlined foreign offshore, the terms of the procedures are much more generous. The IRS will accept non-filed returns. The IRS imposes 0 penalties, but a non-residency requirement has to be established. For one of the most recent 3 years, the taxpayer must establish that they've resided outside of the U.S. for more than 330 days that year, in one of the most recent 3 years. So, especially during the pandemic, many taxpayers can easily qualify. If they're residing abroad, there were travel lockdowns. A lot of my international clients didn't come to the U.S. at all during at least a portion of the pandemic years.
And that gets them into because the foreign is such a generous program. And that just having 1 year, I wasn't aware of that. I always just thought it was for people who properly lived outside the US. Wow, good for them.
It's a real gift.
Yeah, it's such a good program though. Can you imagine the big point in time when the IRS are like, right, if you don't know by now, you should.
So when I was with the government, the streamlined procedures, both of them, domestic and foreign, were subject to annual review, and various constituents within the IRS consistently urged the termination of those procedures for that very reason. Like, this has been going on so long. Well, the people should be aware of their obligations. Look at UBS back in 2008, 2009. It's impossible for people to be ignorant. But that view has not prevailed to date. So every year it would go up for annual review, and IRS executives looked at the raw numbers for the use of the procedures and continued their approval for the next year. Now, I don't know whether those annual reviews are still ongoing. I anticipate they are, and I assume that based on volume, they're still being approved. But the IRS has publicly said these may be terminated at any time. Now, recently, the American Bar Association, I was on the committee that prepared some comments to the IRS, recommended that one, the IRS consolidate its instructions and guidance into a single source for the streamlined procedures and make them permanent. Whether the IRS will take that proposal seriously, we don't know, but we've made that proposal.
Fascinating. I did not know that about the annual review. Yeah, it'd be great if that became permanent. And it makes sense, right? It's good tax policy because even with more resources, there's no way you can get around every taxpayer, and having a path for people to voluntarily come in from the cold and rectify it is great. What happens to so you go back 3 years on your tax return, you go back 6 years on the FBAR. What about prior years?
That's the beauty. Let's say somebody has been living abroad for 40 years, earned significant income, will have significant U.S. liabilities, but they were truly non-willful. The trade, make an SFO submission, 3 years of tax returns, 6 years of FBARs, in lieu of all other filings. Basically, come back, get into compliance, stay in compliance, and we'll be happy. That's the essence of the government's offer.
For some people, this is such a staggeringly good solution to their problems. Let's talk about a critical, absolutely critical piece, though, of this jigsaw. For me, it all hinges on this piece. And this is why I think it's absolutely imperative if you do this, you work with a lawyer as well as an accountant. And that is how you qualify in terms of your state of mind or the culpability of your actions.
State of mind and culpability can be analogized to, let's say we have a dead body on our hands.
Mhm.
Was it a premeditated murder, the intentional taking of a human life with no self-defense argument? Or was it accidental manslaughter? Or was it somewhere in between? So in the criminal context, when we're dealing with a dead body in front of us, state of mind is crucial to determine what the appropriate penalty is, if any. Similarly, in the tax context, we have a spectrum of states of mind, from willful, that would be like committing murder, to having a legal defense to penalties, considered reasonable cause. That would be like having a self-defense argument when the dead body's in front of us. So we have to analyze the spectrum of intent when it comes to Title 31 violations and tax violations. And really, this is a gray area. Does the taxpayer meet this nebulous threshold of non-willful? So what do we mean by non-willful to qualify for the streamlined procedures? We have willful and we have reckless. The IRS and the body of case law relating to FBAR penalties has essentially compressed recklessness and willfulness together. Non-willfulness would encompass gross negligence, and completely benign activity. And it really takes an understanding of the body of case law and an understanding of the taxpayer's facts to make that judgment call.
Non-willfulness includes gross negligence.
An IRS spokesman who mentored me at one point in my career publicly acknowledged that gross negligence is encompassed or by the term non-willful.
Am I right in thinking reasonable cause, which is similar but different? Would you expect gross negligence to meet the reasonable cause criteria as well, or not?
We could think about reasonable cause being a much lower level of culpability than gross negligence. We might, analogizing back to the dead body in front of us, we might say gross negligence is some form of manslaughter versus murder.
So, yeah, I know, I alluded to it before, but this concept of willful blindness that the IRS talk about, would that meet the standard for non-willfulness?
This is where it becomes very difficult. Willful blindness correlates very closely to recklessness. And the IRS and the Department of Justice Tax Division have successfully argued in federal court cases that where a taxpayer has a Schedule B in their return, Schedule B has a section called Part 3 at the very bottom with a few questions about foreign bank accounts and foreign trusts. So where there's a Schedule B, the taxpayer is said to have been put on legal notice of those questions on Schedule B, Part 3, lines 7 and 8. And if they've checked them no, when in fact they should have checked one or more yes, the IRS has been very successful in arguing that that constitutes reckless conduct because the whole return is signed under the penalties of perjury. On the flip side, though, I helped write the FAQs for the streamlined procedures that acknowledge that many people accidentally check no. So it really requires a fine-tuned analysis of why the box was checked no, who checked no. Was it the preparer on their own without consulting the taxpayer, or were there other circumstances in the background that could excuse it to determine whether the conduct was willful blindness akin to recklessness, or was it just negligence?
I just want to bring this to life for people as well. So, as I mentioned before, I meet people all the time, and we spot some form of non-compliance. And at that point, assuming the person really had no idea, I believe, not a lawyer, but I believe you've got a great case for non-willfulness. You didn't know it's been brought to your attention, and you resolved to fix it, and that fact pattern will hopefully line up. But where it can get muddy, I imagine, is when someone learns about something, learns about a non-compliance or an issue, and chooses to do nothing about it, or actively chooses knowingly does something incorrectly or wrong. And then later thinks, you know what, now's the time to fix this. I'll try and do the streamlined program. Well, maybe at first you were non-willful, but for the last 3 years, you've known you shouldn't be doing this and you continued. That potentially disqualifies you from the program, on my understanding, right?
It would. And we can analogize to the old expression, ignorance is bliss. Sometimes when somebody's truly ignorant of their filing requirements, that's much better than having been informed and then ignoring the filing requirements. And the IRS has seen cases where taxpayers truly were non-willful at point one in time, and then they were dilatory, waited 2 or 3 years to take any action at all, then took action, and the IRS has successfully argued, well, that action taken in year 3 rather than at year 1, that action is no longer non-willful.
And you're out. You don't qualify for the program. It's the options, which hopefully we'll get into in another podcast, are radically different and much less attractive.
Yeah.
So, Dan, I know I have to let you go here for your next appointment. This has been a masterclass in just to speak to someone who was there, who's built it, who's seen the submissions. We've not even got onto the submissions. That you have to weave a story of non-willfulness. A couple of lines saying, "I'm sorry, Governor, I had no idea," is not going to cut it. This is why you need to. This is a process. You need to tell the IRS everything, good, the bad, the ugly, and explain in detail why you are non-willful. And for that, you need an attorney. I believe you truly need an attorney to do this properly, because even if you're non-willful, if you mess up the submission, you're out, and then they've got all the facts. You're handing them a smoking gun.
And concerning the narrative component, that really is the most important component of a streamlined submission. When I worked for the government, I literally read thousands of streamlined submissions. Many were done by CPAs with just a paragraph or two. That's not sufficient. That doesn't comply with what the government really wants. There are FAQs that I helped draft that explain the IRS wants a complete story relating to the noncompliance. Every factor that relates to the noncompliance needs to be addressed.
If you're listening to this If you're an expat or an immigrant, you came here mid-career, there's a very good chance you're in some form of non-compliance. Don't bury your head in the sand. It's very possible the IRS already has this information about you, and it might one day catch up with you. There are solutions, palatable solutions. Don't bury your head in the sand. Take advice, take good advice, and resolve this and don't have it hanging over you. That is my message to everyone, and I think we've covered a lot. We covered that today.
Thank you so much, Richard.
I'm so grateful you came on and talked to us about this. Where can people find you?
My website is pricetaxlaw.com. Alternately, just Google Daniel N. Price and you'll find me.
Lots of good stuff on LinkedIn as well, so you'll find him there. I hope you'll come back and talk to us about the other programs. Learning from the master himself is are people going to want to hear this?
Thank you, Richard. I look forward to it.
Thank you. See you soon.